Hi guys, thanks for tuning in to another episode of Nuggets News. Well, today I want to share with you my 2020 forecast and predictions for the gold and silver market. The last time we spoke was when gold and silver just had their big breakouts. Gold had hit $1,550 an ounce and silver $18, which translated to over $2,300 an ounce if you were in Australia. And my inbox, the YouTube comments, Facebook, Twitter, it was just lighting up, and we saw the first tastes of FOMO, and it reminded me of the crypto markets a little bit. And I actually said to hold off and don't FOMO. I think there's a bit of a pullback coming, and some people said, aren't you bullish on gold? Don't you think this gold is going to go up? But yes, often we get a bit of a pullback and a retracement, and now we've had that. So I want to share with you where I think it's going next and what happens in terms of geopolitical events that could really drive gold and silver higher. So a few people did say, all these crypto YouTubers are jumping on the gold and silver bandwagon, but if you follow my work, you'll know that I was a contributor on Hot Copper for nearly 10 years on all the gold and silver stocks, and before I actually got banned for sharing videos about Bitcoin, believe it or not. So look, I've been a big believer in gold and silver ever since the last financial crisis, where I lost a lot of money, as most of you know, and that started my journey down the rabbit hole. If you're a complete beginner, check out the video I did about how to buy gold and silver, complete beginner's guide, whether you should buy metals or stocks or do some trading. But personally, I recommend everyone buy some physical as the first thing you should do. And if you can't afford gold, buy a bit of silver, but that's where to start before you get into picking stocks and doing trading, which I'll touch on a little bit today. Okay, so what happened last year? Well, we had the big run up in negative yielding debt, and I've done plenty of videos about negative interest rates, and that was a big catalyst for gold and silver. Some say that was a driver of Bitcoin as well, but that has since tapered off a bit. The amount of negative yielding debt came back about $6 trillion, and that really took the wind out of the gold market after such a big run. It needed to have a correction either way. But basically, that negative yield just spread around the world, and now we're kind of waiting to see, well, what happens next? Are interest rates going to go lower again, and they're going to go more deeply negative? Is it going to spread to more countries? And I think it is. I think it's just inevitable. When you look at this chart, you can zoom out as much as you want. Over time, interest rates have been going down. And because of how much debt is out there in the world, we can't have high interest rates. That would just crush individuals, businesses, anyone that's loaded up with all this debt. They can't afford higher payments. So that yield curve, I think, is going to turn down again at some stage, unless central banks change what they've been doing. And I'm going to talk about that as well. Now, for those of you that are in our Facebook community, I spoke about once this correction was over, we had a nice $100 pullback that if we broke out of this bull flag or falling wedge, then it could be game on. And that was once we crossed that $1,500 barrier. Again, we know we've had a massive move up to over $1,600. So let's take a look at what have been the big drivers and what I feel are going to be the main catalysts for 2020. In Australia and a number of countries around the world, you know the story about trying to phase out cash, and I think that's in preparation for negative interest rates. Now, there's been a lot of talk about what's going on, and as usual, central banks are denying that it's anything to do with negative interest rates, and we know that they're not going to tell us even if that is the case. Around the world, we've seen talk of bail-ins on depositors, as well as possibly trying to take your gold and silver or your Bitcoin again. I'm sure all those things are going to come at us in the future. So be prepared for that. Have a plan. Do you know how to maintain your privacy? Are you happy with the assets you have? Are you prepared for a bank bail-in if banks go under in the future? And can you get access to your assets and flee to safety if you need to? So that was an interview that we did with Paul from Ainsley Bullion. But around the world, this flight to safety, and people that see what is on the horizon. So Germans rushing to get more gold. We know that in the EU, they're looking to bring down that amount that you can buy anonymously. So there's already talk about dropping that to $2,000, then down to $1,000. So people don't want to be monitored. They don't want you to know everything they're doing and being surveilled, and they want the right to spend their money and save in something that's tangible and that can't be printed away by governments. The other thing we've seen talk about now is that Greeks, for example, may face fines if they don't spend 30% of their income electronically. So obviously China's looking to launch a central bank digital currency. All these different central banks around the world are looking to launch their own cryptocurrencies and stable coins. Just today in Australia, we got news that they've been tinkering with a private Ethereum chain. So this is going to happen, and they want to monitor everything you're doing, and they're going to force you to spend your money on what they want you to spend it on so they can track and trace you. So really crazy stuff, and this is a massive driver to get out of that system, to opt out, hold your own wealth in the form of gold and silver, and obviously Bitcoin cryptocurrency I talk about it as a lot as well. But probably the biggest driver of late has been these repo markets. And just yesterday we had the first talk about, well, all this money we've been printing and putting it into the markets and lending to banks and all this QE. Look, it hasn't worked out well, so maybe the next step we try is just giving it to hedge funds. So this is absolutely nuts where investment funds, hedge funds, small lenders, what's next? They're just printing money and giving it to anyone to try and prop up asset prices. And I just don't know. Well, I do know. It's because more people aren't educated. If everyone knew this was happening, we'd have riots on the streets tomorrow. So as the market said, the title says here, the repo market is so broken, the Fed wants to change it, and they're going to start trying different things. Now, recently another event took place, the tensions between the US and Iran, and that really led gold prices higher. So as some people were saying, gold is dead and Bitcoin's the new gold. And I've been a big believer in both, and saying that when we have a crisis, that 5,000 year history of gold and all those huge investment funds around the world, they're going to flee to gold. It's got the track record, it's got the safety. And sure enough, we saw that enormous move and people went to gold at a time of crisis. So that is not going to change, despite some of the crypto community talking negatively about gold. Next up, we've got the BRICS nations. So Brazil, Russia, India, China, South Africa. They're looking to turn away from the US dollar. They're looking to build their own payment system. The US dollar has had way too many benefits as the world reserve currency. And this just isn't their adversaries that are saying this now. It's the Bank of England, Mark Carney. They're saying you've had too many privileges. You get to continue to print all this money. You've got the world reserve currency. All the global debt is denominated in US dollars. People need to pay you back. There's constantly demand for US dollars. That's causing the US dollar to really strengthen lately, and that's causing a range of issues. So I think we definitely start to accelerate in that move away from the US dollar having that privilege and being the world reserve currency. Now, look at the amount of debt. You've all seen the national debt clock before, 23 trillion, unfunded liabilities now passing $1 trillion a year. This is just enormous in terms of the level that it's growing to. But think about if they lose that status, that privilege, and no one else wants dollars. All of a sudden, they have to print all these dollars to fund all these liabilities to the tune of 100 or 200 trillion globally, and that is going to be massively inflationary and just possibly turn into that hyperinflation event. Now, that's a long way away, but that is what can happen at some point in the future if we need to monetize all this debt. And the debt is growing far quicker than the economy, and that's the thing to remember. Now, for the Aussies in the crowd, we've also got that Australian debt clock. Our national debt isn't quite as bad as the US and a lot of other countries, but we've got more private debt and household debt. So similar things do apply. Now, a lot of people like to say that gold and silver are manipulated, and I do think there is some degree of that in play, particularly all the cash-settled markets, those futures markets where traders can spend countless amount of money shorting gold and silver and selling something that they don't own. And I believe there is some sort of play to keep that price capped to some degree. Now, check out the interview that I did about that. The gentleman that I had on was fantastic. He's been in the markets for decades, and he doesn't really believe that that's taking place. And when you actually look at the price of gold in a number of currencies, in Australia, for example, over $2,300, as I said before. You look around the globe, it's at all-time highs in nearly every currency apart from US dollars. So people say it's been suppressed, but it's at record highs in nearly every currency. So look, maybe in the US, maybe in those Wall Street markets it's been suppressed. I'm not sure. But at some point, the demand for real metal is going to, I think, overrun all those markets, the futures and those games to some degree. So when we look around the world, we've got all these currencies. I've done videos about this before, and they've got massive market caps in the hundreds of billions of dollars. And one by one, we're seeing these currency wars. Now economies are slowing. The first thing that countries want to do is debase their currency, lower the value of it to help their exports and help their economy. That's the go-to. We've seen the massive tension between China and the US at the top of the table here, but it's the same for all these currencies going forward. And we've got gold up there. It's a very, very important, and it does act like a currency at times, as well as obviously Bitcoin down the bottom of the list. We're going to see more of that used as well. But that flight to safety, that huge market cap, the track record, gold is a very important world currency still. Now, we've seen countries try to repatriate their gold and get all these excuses. It's been lent out to this person or that person, doubling up on the books, triple entry accounting. You loan it to someone, you both think you own it. So when people try to ask for their gold back, they've got some excuses, and it's been told it's going to take years to get it actually back, and no one knows who owns what. So look, hopefully that is going to change, but there's definitely demand there from countries that want something sturdy in case we go down this path of really nasty currency wars. As well as the actual central banks themselves, who say that gold is, this relic and it's not useful anymore, and they've got all these new models and theories, yet central banks themselves hold gold, and they've been on this remarkable buying spree, as it says here. And you can see in the numbers, enormous amount, hundreds of tons of physical gold, and central banks have been net buyers all through that bear market that took place. And we know that number was even bigger again in 2019, which isn't on this chart here. So next up, I want to talk about the central banks and the printing of money they've been doing to buy up bonds and keep those interest rates low. Investors have flocked to negative yielding bonds because even though they're going to lose money on the yield, they know that the central bank is going to come along and buy it off them and pay more. So that's been the play there. Now, the next thing they're talking about doing is buying corporate bonds off businesses, or buying stocks, and that's already happened in Japan. So you look at their total ETF holdings, they own something like 75 to 90% of all the ETF funds in Japan, which is absolutely nuts. I just don't know what anything is worth these days if every time the price goes down, banks are just going to print money out of thin air and buy it and keep the price up. So how do you value anything anymore? And those holdings of the Bank of Japan are just one example of central banks around the world. The Swiss National Bank. Look at the amount, $3 billion of Apple shares that they own. And again, these are from 2017. I'm not sure what the latest figures are. But printing money to buy Apple shares, Google or Alphabet, Microsoft, Facebook, Amazon. How is this normal and allowed? I'm not sure if it's happening in the EU yet. They've spoken about possibly adding it, and I don't know if it's happening in the US or if this is, the plunge protection team that hides behind a shadowy veil. But we know for a fact that central banks are stepping in with money that they've printed to buy stocks, and I just don't know how that's fair on you or me. Do we get to print money out of thin air to buy stocks or to buy gold or silver or crypto? No, absolutely not. So central banks actually benefited and made $55 billion in profit, more than Apple, just from the fact that they got to print that money and buy stocks. And around the world now, it's over $1 trillion that central banks hold in equities, so in shares or stocks, you can think of that as. Now, I made a bit of a joke on Twitter at the end of the year, I think it might have been the 1st of January, that the easiest trade you'll make this decade is the Australian stock market, because we haven't gone down that path yet of QE and negative rates. But if there's talk of rate cuts and QE, the market's going to go up, and if that doesn't happen, the market's going to go down. And literally here we are, 2 weeks later, where we've got retailers closing down left, right and centre. We've just had the worst fires in history. Air quality is horrible. The tennis is on. It looks like that might not go ahead. Tourism is down. Wages are stagnant. Unemployment growth is ticked up above 5%. Household stress is rising because of these massive mortgages. And none of that matters because there's now talk that the RBA are going to cut rates and start doing QE. And guess what happens? The stock market broke out and it's record highs. It's up 5% in 2 weeks. It's absolutely nuts what is going on. But it's kind of laughable, but you've just got to go with it for now until this bubble ends. So the Fed have begun increasing their asset purchases through those repo markets and now buying treasuries again and talking about expanding that, as I said, possibly to hedge funds. But whatever you do, don't call it QE4. They don't want that headline out there. But look, people are laughing because the fact is this is basically QE, whether you want to call it that or not. Now, one theory that I've got is that this is their only way out because pensions are going broke all around the world. They can't afford to pay these retirees. There's just so many retirees, that baby boomer generation. There's less and less workers. They're not getting pay rises and less collecting in tax receipts. So there's no way that we can pay what we have promised. So the only way out is to possibly inflate their retirement funds that are full of stocks. So this is sweeping the world, and it's kind of everyone's just going along with it at the moment because everything is going up. Now, we know that the other option that people have been told is that we're going to tax you more to pay for everything, and they're not tolerating that. So we've seen people put on these yellow vests and protest, and this has now spread to a number of countries around the world. So as governments are between a rock and a hard place, I don't think they really saw this coming, that people weren't going to accept what they're doing. And again, it goes back to that education. Are more people aware of what's going on than were aware even 10 years ago? We saw Occupy Wall Street, but we didn't really see the protests to this degree and going on for this long. The other thing that's been spoken about now is modern monetary theory. Well, if we've got to pay all these these promises, the government just spend money. We don't even need to print that money and borrow it. Let's just spend as much money as we need to. And it doesn't really matter as long as we've got our own currency, the Aussie dollar or the US dollar. Let's just spend, it doesn't matter. And I think they're playing a very dangerous game here because they haven't had inflation for so long. They can't get inflation. All the money they've printed's gone into these financial assets and not the real economy. And I think that this is really living dangerously. If you start to spend in the real economy, you're going to get inflation, and then you have to raise interest rates with everyone with all that debt, and that ends really, really badly. Now, we've got some latest figures out from Divisia. This is the M2 money supply, and it's tracking at around 7%. So that's more like what I've spoken about and done videos about. The cost of real goods and living is rising far quicker than the 0 to 2% that they tell us. So check out that Truth About Inflation video I did a couple of months ago if you haven't watched that one already. Next thing I want to touch on is the only asset class that hasn't really gone into that bubble yet, and that's commodities and gold and silver to some degree. So if you look at the ratio between the S&P, the US stock market, and that commodity index, you can see that there's these stages where we have stocks that are really overvalued, and then times when commodities, gold and silver, get overvalued, and it ebbs and flows. And at the moment, we're basically at this record low where commodities have never been cheaper relative to stocks. So look, in the short term, we don't know what's going to happen, but generally this is going to mean revert or even swing back to this extreme over the next 5 to 10 years, you would think. Now, again, another chart that just shows the ratio between the gold and the Dow there, but same concept where we are at these lows. So let's actually take a look at the gold price. Now, since we've had that big run up, we've had the pullback over a number of years. It retested that peak, just so basic with our technical analysis here, drawing these horizontals. I love when technical analysis works like this. And then more recently, we were talking about this massive inverse head and shoulders that looked to be forming on multiple time frames, and we had that neckline. And once we broke out, it was all systems go. Now, since then, we've come up and we've retested again, just this horizontal where we had the monthly closes. If we want to get out our fib retracement tool from the top here, we can see that that's right in that fib golden retracement zone. So look, I actually think that we could get a little bit more of a pullback over a number of weeks or maybe even months, but that would be a gift, another buying opportunity. So look, I'm not sure if that's going to happen or not. Hey, I'd love for us to break through here and just keep charging higher, but that depends on what unfolds with all these geopolitical events that I'm talking about. But either way, we have to keep in mind that it's been an enormous run in an $8 trillion market. So gold, if you want it to go and break new all-time highs this year, you have to be realistic. Well, what's it going to do the year after and the year after? And look, I'd love us to grind higher over the next 10 years, $1,000 a year, rather than have this huge parabola and then give it all back again. So I want us to build that firm base, but it's certainly at a really pivotal point as we are right here around $1,600. So let's quickly talk about silver now. And we know that silver has those wide range of industrial applications. So it is more tied to the economy. So one of the things that's not spoken about enough is that booming demographic around the world of people that are coming out of poverty into the middle class. So if we get all these people now starting to buy phones, cars, computers, that's going to take up a lot of silver, gold as well, and electronics, but just all commodities in general. So that could be really inflationary and something that isn't been spoken about a lot in the West at the moment. So really good for silver. And again, when we look at that gold to silver ratio on this chart, we can see it ebbs and flows. The highest it's ever got is around 100. When silver hit $50 back in 2011, it bottomed out at around that ratio of 32. But back in the 90s at the moment, currently sitting at around 86, sorry. But generally, this means that, maybe we do go a little bit higher. But if silver does pick up with its use case and it tends to follow gold and outperform gold once the bull market gets going, we would think this is going to mean revert and possibly head back to the 30s. And we know that the mining ratio, the ratio it comes out of the ground, is even closer to maybe 10 to 1. So that's where the real silver bulls want to see that gold to silver ratio. So looking at the chart, silver did have a massive run. It tends to outperform upside and downside, as I just spoke about. Perfect pullback to the 78.6% fib retracement, and it hasn't actually broken through this. It's not really a head and shoulders yet. I'm not sure what pattern we could possibly be forming, but we've got to wait and see if we do pull back down here and maybe retest that. But look, either way, it hasn't had that huge breakout that gold has just yet. When you consider gold is up here testing sort of these areas, would be the comparison here around $26. So if silver does get through there, it very quickly could move up to that $26, which would be fantastic. Now, in terms of the stocks, as I said before, that's more for the medium or advanced traders and investors among you. One of the things we do for our premium members is these reports on the best silver stocks, the best ETFs, the best gold picks. So if you're interested in those premium reports, head over to our website. You can also trade the indexes if you don't want to pick individual stocks. So as you know, I've been recommending this, particularly in Australia, where it's really hard to get access to the US markets to trade things like the GDX, the miners ETF, or the GDXJ. So you can trade these really easily from that eToro app if you are in Australia. I've got my copy portfolio I'm setting up with Bitcoin and crypto and gold and silver, which you can copy that as well. And we have got that special on at the moment. If you sign up and do a few trades, you can qualify for that $100 free Bitcoin and a deposit bonus as well. So I'll put that link below. But I think in terms of the broader cycle where we're currently sitting is in this disbelief phase where the miners didn't really rally very hard. And we saw a little bit of that FOMO from people that are watching our channel and a bit from the community. But there's no way that we had this complete optimism and thrill and this is a new paradigm. There's no way we had that. So a lot of people are thinking that this is just another, suckers rally. There wasn't a lot of excitement or people looking to even buy that pullback. There's not a lot of news around, and yet gold's at these all-time highs in all these different countries around the world and currencies, and people just aren't really excited about it. So I actually think that's a really good thing. There's not a lot of attention there, even though we've moved out of this, depression and anger stage, and I think we could be in this disbelief or this hope phase before we do enter the bull market over the coming months and years. So that's not to say what's going to happen next week or tomorrow. I do more short-term updates if you're interested in those as well, but I'm talking big picture, longer time frame for 2020. So tying it all together, I think we've seen some of the smartest people in the world warn that something is wrong. Check out these pieces written up by Ray Dalio, The World Has Gone Mad and the System is Broken. Interviews with Stan Druckenmiller. He's been one of the best performing hedge fund managers in the world. His hedge fund is talking about gold being up 30% this year. So really smart people. This isn't the gold and silver bugs and conspiracy theorists, as people like to label us, that are saying gold is going to go up. And there are people out there that have been saying it's going to go up every year and stocks are going to crash. I actually think that if the Fed print more money and don't let stocks crash, that's way more bullish for gold, silver, even Bitcoin and crypto. The more money they print and flood the markets with, the higher these bubbles can go. So when we read articles like this is a few years now, but this was the general sentiment that gold was a pet rock. The optimum allocation to gold is always zero. So traditionally, people had gold in their portfolios as a small percentage, as insurance and protection, but people just don't see the need for it anymore. And the allocation by fund managers has never been lower. So it only takes that tiny little uptick for this little market cap at $8 trillion as we saw, $1 trillion and the market jumps $200. When you look at how big the stock market is, all the money around the world, look, I think this is actually an understatement when you think about derivatives. I've heard figures, into the quadrillions. And so when all that money is going to chase something that's real and hard assets, particularly if we start to get, that inflation and hyperinflation in different currencies, people are going to want to own something real. So when you look at the balance sheets of all these central banks, they tried to reverse. They promised us that what they were doing was temporary. It was emergency measures after the GFC. Printed all that money, tried to undo it, and they had to reverse course and do a backflip practically overnight. And at the pace they're at, they're going to surpass their record amount of money printed and balance sheet assets in the next couple of months. And I think that is really the thing that can kickstart a rally in these alternate hard assets. The final article I want you to leave you on, I'm going to do an entire episode about this, was Jerome Powell. So 5 years after the Federal Reserve meetings, we get the notes, they get made public. And back in 2014, he was talking about the dangers of having these large balance sheets and that he didn't think that they'd be able to undo them. And sure enough, basically everything he was worried about and predicted came true. And this is when he was just a board member. This wasn't when he was the head of the Federal Reserve. So now he's in charge. He's actually doing, the opposite of what he said at the time. He didn't want to go down this path. He didn't want negative interest rates. He didn't want to buy these assets because the market would get addicted to it. And that's exactly what has happened. So I will do an entire episode about this. Very important stuff. But historically, we know that gold tends to track the total amount of money in circulation, the total amount of debt, inflation, and I think a big run up in gold would only be bringing it back to break even. I think we can overshoot, we can overperform. Gold can go a lot higher longer term. So if you want any of those reports, if you want my daily insights, if you want to know what I'm thinking about gold and silver, as well as Bitcoin, crypto, and all those other assets, head over to our website, nuggetsnews.com.au. I hope you guys have enjoyed this one. If you have, please hit that like button, subscribe if you haven't already, share this video around, and thanks for tuning in. Cheers.